Business Now. Charles Pellegrin is with us. He's focusing on tech sell-off that has rattled markets on Tuesday. It's still having an impact, of course, this Wednesday as we are here in Europe.
Yeah, and perhaps more specifically than tech, this seems to be related to chips, the building blocks on which the AI boom is built on. Let's start by looking at how U.S. stocks closed the Tuesday session. The tech-heavy Nasdaq composite index fell 2.2%, with chip makers like Micron and SanDisk both falling more than 13%. The Nasdaq has fallen for 4 of the 5 past trading days. Meanwhile, in Asia this Tuesday, well, we've seen a mixed picture. The Kospi in South Korea recovering some of its losses in this Wednesday session after falling 10% on Tuesday, dragged down by the big chip makers there, Samsung Electronics and SK Hynix. Taiwan's leading index, though, is lower this Wednesday, with semiconductor giant TSMC trading just under 4% lower. Let's look at the picture in Europe now at the open. European shares also weighed down by the tech sell-off at the open. The CAC on just a tiny bit higher, 0.1% higher, while the DAX in Frankfurt is 0.4% lower at the open.
So what's behind these moves on the markets then, Charles?
There's a number of factors at play here. AI-related stocks have been really on a tear, and perhaps it was time for a bit of a reversal to cool the temperature just a little bit. The major factor weighing on investors is how much capital expenditure is being spent on artificial intelligence, whether it's, quote, compute, meaning the resources necessary to train and run AI models, or data centers construction and power generation. All that is really exploding. Goldman Sachs estimated that over $7 trillion will be spent on this between 2026 and 2031, doubling from $765 billion this year to $1.6 trillion in 5 years. The issue here is whether this amount of spending will be made worth it by future profits. That discrepancy between current earnings and projected profits in the future contributed to the moves we saw in the markets, especially when increasingly AI firms seem to be engaged in a price war that is cutting into that profit forecast.
Now, one more factor playing a part. This is the higher likelihood of seeing interest rates rising.
U.S. Fed Chair Kevin Warsh signaled last week that rates could still go up by the end of the year in order to counter war-fueled inflation, in spite of Donald Trump's preference for lower rates. He said, quote, "I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that." Higher interest rates mean future profits, perhaps generated by AI capital expenditure, aren't worth as much for investors today.
Let's take a step back, though. It's only a small dent in what's an incredible rally, isn't it?
Yeah, the Nasdaq, for instance, grew over 28% over the past year or so, as you can see on that graph. And for the South Korean Kospi, it's almost 100% since the start of the year. But there is one thing to pay attention to in both the case of Nasdaq or the Kospi: the outsized weight that a small number of tech companies have on the entire index. Last year, over 43% of the Nasdaq was concentrated in the Magnificent Seven. That's the nickname given to the tech giants that are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. That's a small pool of companies to depend on.
Now we're going to turn to the heat wave. Some related news now business-wise, as one of Europe's southernmost nations, this is Spain, no stronger to extreme heat. So how on earth, Charles, does it manage?
Well, following devastating floods in 2024, the country inaugurated a number of measures aimed at reducing the impact of heat waves on its workforce, from adapting working hours to even providing a maximum 4 days of paid leave for climate-related difficulties. Brian Quinn and our colleagues at France Télévisions have the details.
Coming on stronger and earlier, Spain is no stranger to heat waves, and it's taking action by necessity. In this Barcelona park, during the summer, groundskeepers start 45 minutes earlier and quit an hour and 45 minutes earlier, a policy now in place for several years. The big development this year, a connected bracelet that measures body temperature. The city has issued them to 1,500 of its outdoor workers.
It detects if we're getting close to heat stroke. If it vibrates, we stop and take a break.
Spain is in Europe's vanguard of adapting to climate hazards following the trauma of 2024's catastrophic floods in the Valencia region, in which 230 people died. On that day, despite a red alert, some businesses prevented their employees from going home early. Since then, the country's socialist government has instituted climate leave, a maximum of 4 paid days off during the highest alerts to limit travel. But data on its implementation has yet to come in, and few outdoor workers are even aware of it. Unions, meanwhile, point out the measure comes with plenty of restrictions.
There has to be a declared force majeure, a legally defined imminent and serious risk. Authorities have to issue a restriction on work-related travel.
Tuesday was Spain's hottest day of the week so far, with 5 provinces on red alert and temperatures of up to 46 degrees Celsius.
Jean Pellegrino, thanks very much with the business news on France 24.